Bill here with the Metals Minute. Today is Wednesday, March 15th, 2023. Well, we have all four of the metals higher this week. Gold up almost 6%, silver up just under 9% for the week. All the details are in the write-up, but we have some interesting phenomenon going on related to the banking crisis. And as you know, the banks that were in trouble in California, and they've also begun to spread nationwide. There's various similar issues, but not to that degree, but similar issues in banks nationwide, as well as our other banks in the West. Swiss Bank is having, Credit Suisse is having some issues, and so that's a major bank in Europe, and so there's some concern about where this is all going to spread, and that has people looking for the security of gold. And the title of this article and video is Gold Safer Than Treasuries, and that's certainly true on a short-term basis. You know, what we've seen happen, or part of the reason for this banking crisis, is banks loaded up on treasury debt. And so normally that's considered a safe asset or a safe bet to make. But the problem is we've had interest rates rising at the fastest pace in history. And so banks that bought a government bond, say a 10-year bond a year ago, that might have been somewhere around 1% yield, and then now we've got 4%. And so that knocks the value of those bonds down. In fact, some of the bonds are 30 to 50% lower in just a year and a half or several months. I dare say we'd be hard pressed to ever find in history a period where gold dropped 50% in the space of a year or a year and a half or several months. So that's the volatility associated even with US Treasury debt compared to gold is off the charts, and that's why a lot of these banks are in trouble. It's also why we've had record gold buying by central banks across the world in 2022. That has continued in 2023. We're continuing to see central banks purchasing gold and buttressing their security with the precious metal. So that's just a good indicator why you and I have been doing it. And if you are new to the gold space, it's a good reason why we should own some gold to protect ourselves against all the craziness we see going on in the economy today. Now let's talk about interest rates. The consensus as of this morning is that we'll probably see a 0.25% increase at the next meeting, but consensus on Wall Street also is that by the end of this year, 2023, we'll probably see interest rates come down 1.25% by year end. And that's because the way things are looking, they're going to have to not only slow the increases, but likely going to have to begin cutting interest rates. And so that's what we shared about last week on Metal Minutes, that we're likely going to have to see some changes in the interest rate environment, and that gold was temporarily knocked down lower than it should have. And already this week, had no idea it would happen so quickly, but it has rebounded and then some. And so I believe that we'll see continued gains and continued good performance in the months and years ahead. Thank you for tuning in. We'll see you again soon.